Welcome back, everybody, for the second session after the break. So, we have with us CA Alok Pansari, a very renowned speaker, and he's also a Lion member. And he's been very kind enough to agree to take this session on startups and opportunities for CA in this atmosphere. So, to give a formal introduction, I would request CA Dinesh Tejwani ji.
Thank you, Vijeta. It gives me great pleasure to introduce today's speaker, CA Alok Pansari. He is a senior partner of Mrs. ASL and Company. CA Alok has experience of more than 40 years in the profession, and he specializes in business transaction and finance structuring, M&A, project advisory and funding, startup mentoring, and startup plays an important role in family business offices. He is regularly involved in various seminars, conferences organized by ICI. More importantly, he was involved as a member of the core team, which was instrumental in the startups fair organized by ICI in 2018, a very successful. And the next one also. Awesome. Yeah. He's also a well-networked professional in business and social spheres. To welcome him, I would request CA Randeep Jhunjhunwala ji to present him with the movement.
The slides in the
Good morning, friends. Now, I guess, or rather, I believe that most of you are in practice. Right or not? In practice. Okay. Now, I did not expect that practicing chartered accountants will be coming to join me on Sunday afternoon on the second last day of the deadline. Tomorrow, I believe, is the last date for filing the extended last date. So thank you for coming, and that too on a Sunday afternoon. Now the topic given to a startup ecosystem and opportunity for the chartered accountants. Okay, I believe in having an interactive session instead of monologue, like I keep on speaking and audience simply listens. So I don't believe in that. Now, how many of you are in any way handling any startup or have dealt with any startup? Oh, great. Okay. Fine. Just can you tell me which was the very first startup in India? Are you aware of? I mean, anyone? Any guesses? No, Infotech is not startup really. Infosys or even that is not startup. Sorry? No. Even prior to that. No. In 1999. No. 1999. The first startup, as we understand the startup, was started. Contest to Win by Alok Kejriwal. Alok Kejriwal, who at that time, his family was in the manufacturing of socks, HHI. शर्मा जी आपको तो पता है HHI के आपने मुझे उस समय तो वही हुआ करते थे हिंदुस्तान मुझेरी. So he came back to India after studying in US and he did not want to join the family business. So he started his startup by name Contest to Win way back in 1990. Now just guess the valuation he got at that time, 25 years ago. Any guess? Wild guess. He got the valuation of 100 crores in 1999. A rupee unicorn 25 years ago. 100 crores was a lot of money. Even today it is a lot of money. He got 100 crore rupees valuation in 1999. And what was the contest to win.com? What he did? He thought of an idea. You know, FMCG in India during those days had very limited creative ideas and internet was not there. So they had a very limited scope of attracting the eyeballs or customers, potential customers. So he designed small contests where the participant used to, answer the questions, participate in the class, they win the prizes. So he got the first sponsorship from Hindustan Lever. At that time, it was known as Hindustan Lever. See why I'm mentioning contest2win.com for two reasons. Startup is a term comprising of two words. First is start, and second is up. Start means you have to start something new. Now that new can be a concept, it can be an idea, it can be a new process, doing the same thing in a different manner, more efficient manner. But it has to be new. Second is up. Now up signifies a very significant characteristic of successful startup. That is, up means it has to be scalable. Continuously it has to grow. Without growth, without scaling up, it will simply collapse. Now, as a chartered accountant, we have a lot of opportunities in continuity with our conventional practice areas. It will be seamless kind of, you can say that you can integrate your conventional practice with startup ecosystem also. You can get new opportunities in startup ecosystem. Now, to understand that, first you need to understand what exactly is startup ecosystem. Now, typically startup ecosystem, the promoters are normally young people, 20 something, maybe at the most early 30s. And there are two types of promoters. One is generation next of the existing conventional business houses. They have their successful business enterprise, the empire is there, but no, they don't want to work under the daddy. They don't want to be dictated or rather told to do something. They want to carve out something on their own, create their own name. So the generation next of successful business houses. A second type is first generation entrepreneurs. Now the second type is actually more prominent, especially during last decade. Most of the unicorns, they are first generation entrepreneurs. You name it, Jetwork or Zerodha or whatever it may be. But they all are first generation entrepreneurs. They do not have any backing of their families. They were not born with a silver spoon in the mouth. They struggled, came up with an idea. So the point here is that most of the promoters are youngsters. Now, for chartered accountants to find an opportunity in the ecosystem, we need to understand the temperament and the mindset of youngsters. You have to be thinking and behaving and acting like a youngsters.
No, you cannot dictate to them. Certainly not. That is out of the, you have to throw it out the window. When they don't listen to their own father, why should they listen to an outsider? So your temperamental approach has to be changed so that you are in tune with their way of thinking. Second typical characteristic of any startup promoter is that very, very passionate and hypercharged, turbocharged. They eat, live, think, sleep, drink their concept. They don't think beyond that. 24/7, literally 24/7. At dead of the night, 3 o'clock, they will talk to their co-partners, co-founders. And they may even bother you also if they feel that it is required. If they feel that they are very passionate and turbocharged. In fact, that is required also for successful startup. Now, what are the typical life stages of a typical startup? I mean, life stages when I say that how it pans out. So the first stage is ideation or conceptualization. See, I call startup promoter as a dreamers. They dream of something unique, which they feel they are convinced. Always remember that they are convinced about their idea. You may not be, world may not be, but they are convinced. So the first stage is ideation and conceptualization. So they dream of something, and then they have to build on that. Now, here, as a chartered accountant, you may help them. Many times what happens specifically in case of second generation startup entrepreneurs, you are introduced to them by their elders in the family. ये है हमारे जो अपने चार्टर्ड अकाउंटेंट है 25 साल से 30 साल से सारा काम देख रहे हैं, you can trust them and he will guide you, she will guide you. So that trust factor is kind of handed over to them. Because of that, you get connected to them. So at the stage of ideation or conceptualization, you can help them. Now, conceptualization, there are 2-3 things. One is the technical thing, which is not our domain, certainly not. We cannot. But you can help them in course correction. I'll share with you my live example. One of my cases, a friend referred to me his son-in-law that is working on some idea and needs your guidance. So he had developed certain tools, analytical tools, which he was using for, polls, election results. So I slowly, directly you cannot watch them, slowly moved him towards more of developing analytical tools for predictive analysis. Use the same tools, use the same capability, same skill set for predicting demands. Now, polls have very limited market. I mean, how much you can make out of it? During election times and political parties, you all know how good or bad they are in paying. But developing and using predictive analytical tools, if you can help some organization predicting their demands 1 year down the line, 2 years down the line, that will be quite helpful. In fact, anyone having clients in garment must be aware of. In garment industry, I was told that their thinking starts 1 year ahead of actual sales. At least 1 year. They visualize next winter. We are in winter 2024, beginning of winter. So winter 25, they already started working on it. What will be the demand? What kind of garments will be in demand at that point of time? So then he slowly moved towards predictive analytical tools for demand prediction. So this is one aspect. Technical aspect, no, you can't help them because this is not your domain, and they will not listen to you also. Fact of the matter is that they will not listen to you also. Now, the second part of the second stage of life stages of startup is business plan development. Business plan development, again, without converting the concept into reality, has no meaning. It remains on the paper or the dream only. So it has to be converted into reality. The technical aspect, as I already mentioned, is not our field or our domain. But business plan development has other aspects also. One is business structure, which is our domain. We can help them. What should be the business structure of their startup? Now, business structure involve two, three things. One is legal structure, whether it should be LLP, there should be company, whether it should be private limited company, limited company. What should be the structure? The second part is legal and financial structure.
How do you base, how do you advise them on the structure part? Like it should be a third company, it should be an LLP or limited company. How do you base that first?
Now, for that, you need to first understand their temperament. Remember two things. They will not listen to you. Number one. Number two, I'll come little later on that aspect. Most of the startups are very, very lean workforce. 3-4 people, back office almost non-existent. You have to keep that in mind. Of course, if they are second generation entrepreneurs, maybe their father can help maybe their existing back office can help them, but they will not take their help. Remember, they don't want to work under their father. Keep that in mind. So most of them work with a very, very, very lean team. Now, about the structure, legal structure, there are 2-3 things. One is to begin with, objective should be that they should not be burdened too much with the compliances at the initial stages. Because it is 1 man, 2 man, 3 man, all are founders, sir. All are owners.
I'm not interested in the compliance related part. Most of the new generation, they are not bothered about the compliance.
So that is where we get the opportunity. See,
But they-
why I am explaining, why I am trying to explain.
You-
Allow me to complete, sir. Why I am trying to explain you that what is the ecosystem. So these are the typical characteristics of startup ecosystem. Now, what are the opportunities for chartered accountant? That is where we get the opportunities. See, when do you get the opportunity? When something is missing from somebody's empire or somebody's toolkit or whatever you call it. So that is where we get the opportunity. They are not concerned, they are not bothered, but then slowly, gradually, you need to make them understand that eventually your objective is to have huge valuation. Every startup has got the buzzword of being unicorn. Now unicorn is worth $1,000 valuation. Now how do we reach 1,000 crore valuation? No one will give 1,000 crore dollar to a proprietary concern. No one will give. I'm into investment activity as well. I do the PE funding, which VC funding. So my investor will not invest in proprietary concern, not even in partnership, not even in LLP, maybe not even in a private limited company. But then, as we move along, you will understand that we have to start structure and build on that initial structure depending upon the requirement. Keep on moving up and up. Maybe you start with the LLP, partnership firm and proprietary concern. I will certainly not at all recommend, because with the legal structure also comes inbuilt discipline. Inbuilt discipline, and discipline is very much required in startup ecosystem, because youngsters will get to handle a lot of money which they had never handled in their life. Without discipline, that will be dangerous. We'll come to that little later on. Now,
One person company.
what I'm saying, if you allow me, see, these are the legal. My suggestion, small suggestion is that if we raise minimum legal query, legal question, that will help us more in understanding the ecosystem and opportunities available to us. See, we all know what are the options available. So that is where our role comes in. That is where we get the opportunity. The startup promoter or founder will not be knowing what are the options of the OPC or company or LLP or private. They will not be knowing. But you are a chartered accountant, you know it. You know the pros and cons. So that is where if you help them, your value goes up.
Only thing what I come after when it starts, they are looking for fun. If you provide them the fun, then they will get.
I think now I need to correct here, sir. Startup, the first stage is ideation, conceptualization, dream. I call them dreamers. Why? वो मुंगेरी लाल के हसीन सपने भी हो सकते हैं, मुंगेरी लाल के हसीन सपने भी हो सकते हैं, और वो जीरोधा जैसे $multi-billion एम्पायर भी हो सकते हैं. But initially at that time, at that point of time, it's just a dream. So you have to keep that factor always in mind. So there we cannot impose on them. आपका ये ड्रीम है, काम नहीं करेगा. You are out. Always remember, when they don't listen to their own father, why should they listen to you? They are very, very passionate and turbocharged about their concept till they fail. End of the world. They will not accept anything given to them which does not fit into their way of thinking.
How much is the success rate? Success rate.
Sir, success rate has got nothing to do with opportunities for us. We need to get out of that mindset. Excuse me for saying that. We chartered accountants have the limitation, the greatest limitation. We always look at the negative side. Always look at the negative. It will fail, it will fail, it will fail, and it will fail. We have to come out of that mindset. See, compliance practice you already have, which you are doing for years together. Tomorrow is the second last date, and I'm sure your office must have been working on all the Sundays, all the holidays, right till 12 o'clock in the midnight, coming early in the office. But that is the result of compliance orientation. You have a deadline. Client doesn't go to the government to extend the deadline. Only chartered accountants go. Why? Because you are too much focused, fixated, not focused, fixated on compliance. So right now we are also discussing that only. We need to get out of that mindset. My humble suggestion is please get out of that mindset of thinking only about the compliances. Compliances should be part of your business. That's it. You have to be compliant, end of the story. But you start with the compliance and end with the compliance and think only about the compliance, then the business gets sidelined. And startup promoters certainly don't like that. Let me tell you, the moment you start doing that with a startup promoter, you are persona non grata, you are not welcome. Certainly not. Now, coming back to the original subject, financial ownership structure. So there we can help them. First is the legal structure. The financial structure, there are two aspects of it. One is that how much they should raise initially. I'm not talking about the raising for the market. I'm talking about the funding by the promoters for the founders, by the co-founders. So there are two aspects. One is the need of the money, how much is required, and the mixture, how much should be debt, how much should be equity. And we all know what are the pros and cons of debts and equity. Second part is their internal contribution. If it is single founder, no issue, but there are more than one. Most of the time, it's a team of 2 to 3 co-founders. They work together. They have their own strengths. Each and every one is having a typical strength. Someone is technically expert. Someone is marketing guy. Third one, mostly it doesn't happen. Third may be a finance wizard. So the first stage of financial structure is deciding about the amount and ownership ratio. Who should hold how much? So that is a proprietary decision, but you can help them in taking a proper decision. Your role will be advisory and guiding. But that is where you get an opportunity. Now remember, always remember, in the first and initial stages of any startup, the revenue is almost zero. It's a negative cash flow situation. So in the situation of negative cash flow, any expenditure is a burden. And chartered accountant fees is always the biggest burden considered by anyone and everyone. That's the fact of the life. So that you have to keep in mind. So you have to make yourself valuable in the eyes of the founders to get the more opportunities and earn more as it moves up the scale. Now, we have understood what is the initial stage. The second comes is the execution and implementation. Because they have decided that this is the concept. Now here I will divert a little bit. What is your idea of startup? What is it? Is it software, hardware, concept, process? What exactly is your understanding of startup concept? Okay.
Anything which is not traditional.
Fine. Anything which is not traditional, something different, out of the box, is out of the box. Okay. Then anything, any other idea, any other?
Technology and steps. There is a innovation and
Creativity.
Technology is hard.
Okay.
No income tax.
Yes, for salary accountants, yes, that is an innovative idea. I just read an email which they were promoting a book. You will be shocked to know. Tax evasion tools.
Thank you.
And one of the portal selling the books on taxation. Of course, I will not name the portal. Anyway, see, startup need not be only on software or technology. It can be related to a fixed physical goods also. Physical goods also. The keyword is something different, कुछ हटके, कुछ नया. There are two recent success stories. One is the Jetwork. Now, Jetwork, the promoter was jobless immediately after COVID. He was employed in US. He came back to Bangalore, and youngsters, he became restless, has to do something. So from his garage, he started Jetwork. Now, what Jetwork is doing? It is actually providing a platform to connect manufacturing facility, entire ecosystem of manufacturing, raw material supplier, finished good supplier, logistics, finance also, trade funding also, everything he built a platform. No, nothing unique about that. Manufacturing is done for years, centuries. There are suppliers, there are manufacturers, there are raw material suppliers. Funding is being done. We chartered accountants also, many of us are engaged in funding activities. Nothing new. But he did and did in a unique way. He created a platform. He brought them together on a single platform. IT was an enabler, but not the idea. It was just a tool. See, most of us understand startup as a technical concept. No, it is not. For them, technology is just one of the tools for efficient delivery, effective delivery. But this is not the concept. Second example of physical goods is Hela, Inframart. Inframart. One of the promoter was working with infrastructure company. Well-to-do family. I mean, but he was working there. As it happens, he had a tip with his boss. He walked out of the office. मैं खुद का कुछ करके दिखाऊंगा तेरे को. You know, that kind of. He started. No, Inframart is again a supermarket for anything and everything to do with the infrastructure. You want raw materials, cement, concrete, bricks, whatever you want. Here's the supply sources. You want labor, you want equipments also. Equipments also. Whatever kind of equipment, whether it is 25 crore rupees worth equipment or 5 lakhs rupees worth of equipment. You want to buy it, he has the supply source. If you want to rent, take it on rent, he has the supply source. So what he did, he created a platform, used the technology as a tool, but it was built around physical activity. Technology was just a tool, not the concept. Not the concept. Now, I'll not be repeating the examples of Oyo or Ola or Uber for the simple reason. They are into service activities. Again, they are using the technology as a tool for bringing people together. So this execution and implementation is dependent on the concept. So if you can help them in correcting their original idea in proper way, that will go a long way. Now, execution have got 3-4 aspects. One is team building. The core team is already there. Now they have to keep on building more people skill set. For technical, they have to hire more people. Now there you have some role in the sense that you can identify what kind of resources are required. You can help them in identifying not technical resources, but human resources. Like we are more conversant with the back office, so you can help them in identifying what are the back office kind of people are required, like you need company secretary, chartered accountant, or qualified or semi-qualified. Of course, cost will be a very, very important factor in the initial stages. But at the same time, as you all know, compliance is required. So somebody good has to be hired. Second part is not our domain, backend tech creation, technical. As I said, technology as a tool. So this is not our domain. The third is physical infra creation. Physical infra creation, we have some role to play, an opportunity also. The perennial question we all address and understand also, buying and leasing. You need 10,000 square feet office space. Money is not there. So whether buy it or take it on lease. Those kind of decisions you can help. The second and the most important part of life stage of startup is scale up. As I mentioned in the beginning, startup है वो शेर की सवारी है. शेर को सवार आप शेर की सवारी करते हो तो कंटिन्यूस वो दौड़ते रहना चाहिए. वो रुक गया पटक देगा और खा जाएगा. Similarly, without scaling up, startup is bound to do certain failure. So it has to scale up, and that is the ultimate target. You cannot become from 1 lakh to a unicorn without scaling up. Now comes the most important opportunity for chartered accountant is the funding. As the life stages of the startup move on, there are different stages of funding also. The pre-series, which we call it technical language. Pre-series is what? Before actual activities has started giving the fruits. Really, revenue has started coming in. At that point of time, minimum dilution is advisable. So that they have the full control and they have more scope of dilution at later stage at higher value. Then series A, series B, series C, series D. These are all different stages of funding.
What exactly series A?
Different, like pre-series is that you have zero dilution. Very, very minimal requirement. Like son of your friend is starting a venture. He approaches you. बेटा काम कर रहा है, उसको 10 लाख रुपए की जरूरत है. So you are giving the money more out of the affection, love, and intimacy. Or you are considering psychology, this is a total write-off. You will not get back to see your 10 lakh rupees. That can be part of pre-series. Pre-series, normally the placement is done with a very, very close friends and family. After that, at different stages, I'll come to that. I'll highlight the why it is very important and where that is where we play a very, very important role also and great opportunity for us. I'll narrate with you a true story, true example. How the stages are important and how a proper decision at proper time is very important. You all know about Microsoft. You all know about Yahoo. And you all know about Google. Okay. Yahoo was started much earlier than Google. When Google was started, way back in 1998, Google promoters approached Yahoo. They wanted to get out by getting 1 million. Only $1 million was their ask. Yahoo refused. 1998. Mark the value and the year. In 2002, Yahoo realized the mistake. They approached Google, offered 3 billion. 1 million, 3 billion. 4 years. Google refused. They asked 5 billion. Yahoo refused. In 2008, by that time, Yahoo was a very, very robust platform and very popular. Lot of eyeballs. And 2008 was the time of .com bust, boom and bust. But Yahoo was intact. Nothing happened to it at that time. Microsoft wanted to buy Yahoo. Offered how much? 44 billion. Yahoo refused. 2008. 2016, after 8 years, Yahoo had to sell to Verizon at 4 billion something. 44 to 4. It's not the end of the story. Now Google is nowhere in picture now. 1 million 1998. Today the valuation of Google is 1 trillion. $1 trillion. The point I'm trying to highlight is that at what point of time, at what value you should sell. That decision is very, very crucial. As chartered accountant, as we understand the numbers properly and very well, we can help the client. And that is where we have the opportunities. See, my firm already have a very, very good conventional practice. My firm is almost 45 years old. We have good conventional. I am not against conventional practice. But what we get in conventional practice, you sign the audit report, you sign the balance sheet, you file the IT return, you file the GST return, you get a fixed amount of fees. And what great, in the eyes of the client, what you did? Nothing. Balance sheet तो हर साल ही बनाते हो आप. IT return तो हर साल ही करते हो. What new? But in case of values and funding, your value is visible, recognized, and monetized also in terms of fees. So that is where the great opportunity lies for chartered accountant in startup ecosystem. Now, why I gave you the example of Yahoo and Google and all was the timing and proper valuation. See, had Google diluted at that time, the Google promoters of the core investors would not have been left with much to sell further at higher value. I'll come to that little later on. Now, I already covered that business plan development, which chartered accountant can help. Business structuring, legal, finance, ownership, entity. Now, this is part of our conventional practice. Entity registration, LLP registration, company registration. We do it day in, day out. Nothing new. There's another thing called this government schemes and incentives. Government of India is pushing and supporting startups in a big way. There are a lot of schemes available by the government of India, state governments also. There are many things, and all are available in public domain. Our institute is also helping members in recognizing those. Business structuring we have already covered. Now, in government schemes, we have multiple stages of opportunities. First is, of course, that is more for internal study and understanding. Identifying and evaluation of different schemes. So before you suggest to your client, you need to know what schemes are available. Every scheme is not available to everyone. You need to understand what are the criteria, what are the benefits, what are the pros and what are the cons. See, nothing is free in this world, and government schemes and incentives are certainly not. So they come with certain conditions, some baggage of obligation. So as a chartered accountant, we are best placed to study, understand, evaluate them. The first part is we have to do our homework a little bit, identify and evaluate all the scheme. Having done that, which scheme is fit for a particular startup, we identify it. And the first stage is registration. As a chartered accountant, we do it. It's kind of GST registration or PAN number or whatever you call it. The very basic. Then the second part is more important, is the disbursement. Actual money coming into the startup entity. Because till then it is only a concept. You have registered, that's it. Doesn't help you much. The disbursement comes with a lot of conditions and formalities to be complied with. And we are the best suited professional for that. Because the pre-disbursement conditions include most of the financial data and financial papers and entity registration and anti-legal papers, which we are very much well aware of. We are best suited to help the startup in that. Now again, let me tell you, when you are getting some incentive for the startup, again, your value goes up. For GST registration, you may not be able to charge much. But for incentive registration, you can charge little higher. For ITC refund, you may not, income tax refund, you may not be able to even charge extra. But if you get the disbursement of incentive, you can certainly charge a fees. which can be respectable and decent. That can be respectable. Now, government scheme disbursement is not the end of the story as far as chartered accountants are concerned. Post disbursement also there are many compliances and formalities to be done, to be taken care of. So that is where again the chartered accountants get the opportunity. So it's kind of, you can say there's a conventional practice part comes back into picture. And we are actually more comfortable there. But only thing is we are simply diverting little bit from the other conventional practice areas where there are lakhs of chartered accountants. Even non-chartered accountants are there.
How the government is evaluating the promoter?
Sorry,
How the government is evaluating?
I think that's a very, very long, I will need at least one day to do that. Evaluation of the startup funding, how the investors evaluate, how the government evaluates. It's very open-ended, sir. It's very, very open-ended question, very, very open-ended topic. So that is where you get the opportunity. See, you don't have to get to know one immediately. As a chartered accountant, for the startup line, you need to know what schemes are available and which scheme can fit into the requirement of particular client. Having done that, allow me, having done that, then comes the actual implementation. Actual implementation. It's like, let me give you an analogy. When you do the bank funding, bank finance for any client, every bank has got criteria. Every bank has got positive and negative list, priority sector, falana dhikana. Every bank has got negative list. No, we will not fund real estate. We will not fund diamond. We will not fund jewelry. We will not fund gambling. We will not fund gaming. So those things are already pre-stated. But then after that comes the actual credit appraisal and all. So that is the process. That is the process. So that is not something which can be discussed as a concept. There are a lot of variables in that. Lot of variables. Now, government scheme, I'll give you another analogy. Government schemes or incentives for startups, they have one set of criteria. For semiconductor projects worth billions of dollars, they have customized, structured incentive scheme. Customized for a particular specific project. Actually, I'm involved in one of the projects where it's a $4 billion, that is about 32,000 crore rupees. And 75% funding is coming from government. Mind you, 75%. The promoters have to bring in only 25%. 75% is not GST credit, not deferred payment, no. Straight disbursement. 75, 30 out of 32,000 crore rupees project, the promoters have to arrange only 8,000. Now, if you ask me how the government will evaluate, because that is a very, very niche and a very special technology, government of India wants semiconductor to come to India. So they have SMI, Semiconductor Mission of India, and they have structured that. And for each and every project, they will have specific customized structured scheme, incentive scheme. So I mean, it cannot be discussed as a concept, how the government looks at it. But there are many schemes and they are available in public domain. Startup India portal is there. Everything is listed out there. Our institute also has good resources available on the website. So coming back to the topic, post disbursement reporting and compliances are another area where we have huge scope. Now, that need not be confined to your existing clients. The government scheme things need not be confined to your existing clients. Like, Bhavesh Bhai is handling a particular client. Now, conventional practice areas he is handling, and the startup, one of the next generation entrepreneur has started startup. Bhavesh Bhai says, government incentive is मेरा area नहीं, मैं नहीं कर रहा हूँ. शर्मा जी के पास जाते हैं, शर्मा जी incentive का काम करते हैं. So it can be cross-selling. That possibility is also there. Sarvaji can specialize in incentive schemes only. He need not focus on other area. So that cross-selling can also happen. It need not be your existing client. You can have that niche practice area also. Government incentives is a huge practice area. Startup ecosystem, government incentive is a key component, very, very important aspect, at least in the initial stages of the development. Now, fundraising is the core subject for most of us, in the sense, as we call conventional practice and value-added services. So fundraising is value-added service. Fundraising we have been doing, I mean, many of us are doing the fundraising. They help the clients in getting bank loans, getting institutional loans, term loans, working capital, even IPOs. So that is nothing new to us. In startup ecosystem, it has got more value in the sense it's not static activity. It's not that like in normal bank funding, what you do, a project was started, they needed term loan, you arrange for the term loan, end of the story, assignment over. But in startup ecosystem, it is continuously going up because they scale up, their requirement goes up, they need more funds, different parameters. So that is where you have continuous opportunities. Now there are two aspect of fundraising which are where we are experts. One is there are many options to raise the funds. One is identifying the proper instrument, whether it should be vanilla debt, vanilla equity, whether it should be convertible instrument, convertible preference share, cumulative preference share, compulsorily convertible preference shares. Now, nowadays a new instrument has come into practice, safe notes. Now its Indian version is iSafe note. The US version was safe one. Now in US, they don't have this problem of equity or capital only of two type, equity or funding. In India, we have that. So, or we need to have either capital or debt. We don't have third nomenclature. So any money coming into the company has to fit into these two broad categories. So they kind of modified the US safe notes into iSafe. It is yet to be popular, but it is now gaining. iSafe is a kind of convertible, compulsorily convertible preference shares without specifying the value at which the shares will be converted into equity. It's open-ended. Even the time of conversion is open-ended. So that is the big difference. Because the time and the valuation is open-ended, so you don't have to get the valuation report at the stage of issue of the share or at the stage of when it is coming to maturity. Of course, actual conversion, you have to get the valuation report for Companies Act as well as Income Tax Act, as we all know. So iSafe notes are gaining popularity because of flexibility it gives. And flexibility is required by the both promoters as well as the investors. In startup ecosystem funding sphere, everyone wants to keep everything open-ended. I mean, it might sound strange. Investor doesn't want to commit their fund till the very last moment. Wants to have the visibility over the revenue flow and the profitability and all. Promoter doesn't want to dilute or give the dilution right away. So the open-ended things are more popular for that very reason only. So as the things move, as the development happens, as the project matures, things get clearer. So iSafe notes are the new instruments which are gaining popularity. Now in fundraising, there is another important aspect is identifying the sources. There are many types of investors, there are many types of funds. Funds broadly, most of them are AIF. So it can be an angel fund, it can be VC fund, venture capital fund. It can be investment fund, it can be family business offices, family offices, or it can be private investors also. HNI investors are doing big time investors. Now, but every investor has got a typical temperament, requirement. So as a chartered accountant, you can try and match the requirement of the promoter on one side and the temperament of the investor. What are his requirement? The requirement of the investor will be of twofold. One is legal requirement. And second will be no, हम तो ऐसा ही करेंगे. पैसा देने वाले की बात सबको सुननी होती है. पैसा देने वाले की बात सबको सुननी होती है. One side. स्टार्टअप प्रमोटर किसी की सुनते नहीं है. Another side. You understand? स्टार्टअप प्रमोटर किसी की सुनते नहीं है और पैसा देने वाले की सबको सुनना पड़ता है. सुननी पड़ेगी. So now that is where your role becomes very crucial. It's more of interpreting the requirement of the investor and properly explaining it to the startup promoters in terms of what are the pros and cons available of each and every option. This is broadly identifying the source of funding. That actual exercise of fundraising.
शेड्यूल का शेड्यूल टाइम के लिए अलग है.
Sorry?
SC, ST के लिए.
प्रमोटर का शेड्यूल.
ये बता रहा हूँ आपको केस स्पेसिफिक क्वेश्चंस, ओपन एंडेड क्वेश्चंस फॉर दिस काइंड ऑफ टॉपिक अप्रोप्रिएट नहीं है. सॉरी बट उस पे दीज आर अनलिमिटेड टॉपिक्स. Unlimited topics. Your role as a chartered accountant, you need to understand what investor desires, what are his conditions. Promoters, what are his requirement, what is his temperament, and dilution is happening, whether they are going to gain or lose control. That as a chartered accountant, as an advisor, you need to understand both the side, interpret it, convey it properly to both the side, and bring them on a common platform. This is broadly. I'm not giving you the specific steps. I'm saying this is broadly the concept. This is broadly concept. Now, fundraising negotiation is the very, very crucial part because the money actually will happen at that stage. The negotiation, there are a few aspects of the valuation, the most important. As I gave you the example of Microsoft or Google and Yahoo, how much is the right value? So there are two things: too high, too late, too soon, too low. आपको पैसा आज चाहिए 10 लाख रुपया, 10 लाख में आपने 50% स्टेक डाइल्यूट कर दिया, क्या करोगे? 10 लाख चाहिए आपको. 10 लाख के लिए 5 साल तो वेट नहीं कर सकते, पर 50% डाइल्यूट करना है क्या? 50. तो दैट इज वैल्यूएशन. नाउ वैल्यूएशन, स्टार्टअप वैल्यूएशन इज नेवर एवर हिस्टोरिकल वैल्यूएशन. देयर इज नो हिस्ट्री, देयर इज नो हिस्ट्री. इट्स ऑल परसेप्शन. परसेप्शन. मुंगेरी लाल के हसीन सपने भी हो सकते हैं. परसेप्शन. Perception of the investor, perception of the promoter. Promoter says that my revenue 3 years forward will be 25x of my present revenue. Investor says, no, I don't foresee your skill set and your capacity is not that much. It will not more than 3x. Then valuation methodology, historical valuation is out. The discounted cash flow is one of the most popular, and as you all know, I don't know whether this can be stopped, recording can be stopped. Off the record, I can tell you that this year method is the most stupid method of valuation. There are two or three crucial variables, and which are subjective, not objective. Beta, residual cash flow. These are the two key components in DCF valuation, which can change from a valuation from 100 crore to 1000 crore or to 10 crore. You change one factor and rate of discounting. Rate of discounting, beta factor, and residual cash flow. You change any one of these three factors. Valuation can vary from 10 crores to 1000 crore for the same enterprises with the same revenue stream, with the same profitability. So in case of startups, valuation is more of perception valuation, futuristic. So that is where you need to interpret the requirement of the investor, how they see it, and the dream of the founder to properly convey it to the investors as they understand. The level of dilution, as I explained, 50% or 20%, 30%, that's again part of the negotiation strategy. Another important aspect is, see, investors many times for better control and monitoring, they insist on board seat. They want their directorship in the board. And gradually, if there is a friction between the investor, as you all know, grower of Shark Tank, there was a friction between the founder and the investors. Everyone is aware of that story, won't pay. So they insist on board seat. The founder normally don't want, because founder, remember, second generation बाप की नहीं सुनते हैं, इन्वेस्टर की क्यों सुनेंगे? इन्वेस्टर बोलता है मेरे को बोर्ड में मेरा नॉमिनी चाहिए. So that is a crucial negotiation factor. Then key decisions, they normally define decision making metrics. In these decisions, they need the approval of the pre-approval or the post-approval or the post-consent or post-information of the investors, because it is their money. Now the enterprise is running and riding on the money of the investors. So the key decision making process. Then the most important part for both the promoters as well as the investors is the exit terms. Investors bring the money for the very simple reason they want to make money. Plain and simple. They invest one and they want to exit at 5x or 10x or 20x. So normally the negotiation is done in this way, that what are the exit terms? Now, in case of single investors, it's not very difficult to handle, but normally in case of big projects or big investment, there are multiple investors. And then investors and promoters. At the time of exit, next round of funding, like ABC, I mentioned earlier. So next round of funding, what happens to the existing investors? Are they allowed to offer their shares? If yes, at what price? Now, whether investor can drag along the promoter also. I want to exit my 10% equity, so promoter also has to dilute that much for the new incoming investor. So those tag along and drag along rights are important aspect of negotiation. So again, as a chartered accountant, you know what are the implications. First round of funding happened, let us say, at the value of 20 rupees per share. Second round happened at 50 rupees per share. Those who invested at 20 rupees per share, at 50 rupees per share, they are getting good profit. Now, they may say that we want to exit now at this stage, but the promoter doesn't want to. They want him to remain. So those exit terms are very important, because after that, the round which is going to happen after that will have this decision will have implication and impact on the further rounds of funding. So this drag along rights and rights at the time of next round of funding is a very, very crucial and important factor of negotiation. And as a chartered accountant, we can do the number crunching, scenario building. If it is done at this price, what will be the impact on the promoters? What will be the benefit to the investors? What will be the benefits to the promoters? And there again, our advice becomes very, very crucial and valuable. Then in this pre-funding due diligence, most of the investors want DD to be done before they put in the money. Before you see the color of the money, they want DD. Now DD can be, normally it is done by their in-house professionals. When I say in-house, I don't mean their in-house employees. It is outsourced. But again, as a chartered accountant, we can be part of that outsourced team. So due diligence, pre-funding due diligence is another area of opportunities for chartered accountants. And it comprises of both legal due diligence as well as the financial due diligence. And of course, if the company's and investment is very big, then corporate governance also. So that is again another area of opportunity for chartered accountant. In the exercise of fundraising, extensive documentation is done. Extensive. They try to foresee each and every eventuality, and everything is well documented. The first document is term sheet, which captures the commercial terms, valuation, and at what point of time and how much will be given, what are the conditions, blah, 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 blah. And shareholders agreement. Here also, as a chartered accountants, we can play a crucial role. Another area of opportunity for us. See, shareholders agreement is nothing but understanding between two set of shareholders. So we know what are the rights available to a shareholder under Companies Act. Now those have to be properly matched and balanced and drafted and captured in the shareholders agreement. If you are representing the investor, you have to keep in mind the interest of the investor. If you are representing the founder or the promoter, you have to keep in mind the interest of the founder. Due diligence during funding, documentation, and post funding, again continuous practice areas. Most of the investors have a monitoring mechanism, and it is two-pronged. One is through their member on the board. They have internal MIS system, reporting system. And second is third party external professionals. So that is where, if you get the opportunity, I mean, that's another area of opportunity for chartered accountants. Post funding, corporate governance monitoring, reporting requirement. Now here another opportunity. See, MIS structuring itself is a big area. As an investor, what information is required from my investing company? So if we can help the investor in structuring an MIS reporting system, keeping in mind the characteristics of the investee, the startup company, that itself is another opportunity. And having set up that MIS reporting system, that actually doing it on year-to-year basis is another area of opportunity. So I don't think I need to go through this, but still, this is familiar ground for all of us. Regular compliances, periodical we all know, event specific, we have already covered most of the areas. Now we have gone through the opportunities, but then nothing good comes without challenges. As I mentioned earlier also, promoters are focused or rather fixated on their core activity. And for professionals like us who are focused on compliances, at times it becomes very difficult. For them, रिटर्न फाइल होना है, वो प्रॉब्लम होएगी, डिले होएगी, होएगी, your problem, not their problem. Even though it is their problem, but their attitude will be like that, and is like that, because they feel, and rightly so in a way, that their time and energies are required more for the development of the business. Because remember, शेर की सवारी है, ये नहीं चलेगा तो ये कहाँ जाएगा? Compliances की cost and consequences आपको पता है as a professional. They care, but उनके लिए priority different है. So this is a big challenge because they are focused or fixated on their core activity. So you may have to do a lot of pushing, lot of hard pushing. Second is a lean and mean organization, as I said earlier. At least in initial 1 to 2 years, hardly non-existent, barely existent back office, maybe typical one accountant doing the data entry, capturing the transactions. Rest of the things, as a chartered accountant, as a professional, you only have to take care. Now that is opportunity at the same time, a burden also. When you are doing something, it's your responsibility. Because you cannot and you do not expect their promoters to give their time and energy for those things. Very, very lean and mean organization. The third part is resource allocation. You may look at the balance sheet that, see, you got the valuation of 100 crore rupees. Can't you spend 50 lakh rupees for hiring 2-3 good people in the compliance department? 100 crore valuation, 50 lakh rupees साल का is not a big money. Why not? No. Their almost 100% resource allocation is only and only for business development. So other areas may remain resource hungry, at least in the initial stages of the startup. So these are the big challenges. See, as a chartered accountant, we need input. Our output is one derivative. We cannot generate the output automatically, just like that. Our output is derived from the input given by the client. But here the input may not be readily available, timely available because of these factors. Now, opportunities and challenges, but what are the rewards? Huge. You can't even estimate or imagine. Successful startups grows faster than any other businesses. Jet1 was started in somewhere in immediately after COVID. He came back after COVID, March 20, June 20. He launched it somewhere in late 2020. And within 2 years to 3 years, it was a unicorn. 2 to 3 years, it was a unicorn. And that too, post-COVID. For the first 2 years post-COVID, things were very hazy, not clear, ambiguous, whether we are looking at the doomsday, things will restart or not. That was the scenario till early 21 and even late 21. That was the scenario. But this guy became unicorn immediately after that period. So now see the speed of growth. See the speed of growth. Now, if you are hand holding and continuously with the startup since beginning, and your value has been registered with in the mind of the founder, then you also grow. In absolute terms, the size may not be the same, but the rate of growth will be more or less in the similar pattern. It will be more or less on the similar pattern. Yes, many of you must be having that question, how do we compete with the big four? Because this kind of business is mostly taken away by big fours.
registration कैसा करें?
Sorry? किससे registration? startupindia.com पे सारी processes वगैरह सब दिए हुए. I suggested it earlier also. We need to do little homework. Lot of resources are available on institute's website as well as portal of Government of India, Startup India. Much very valuable resources. To begin with, it will be too much for us. I mean, may not be able to absorb also. But lot of resources and valuable resources are available.
Do the pre-due diligence as a chartered accountant.
Sorry?
As a chartered accountant, how to do the pre-due diligence? When the.
Now, I'll come to that. See, I forgot to mention one more opportunity, area of opportunity for chartered accountants. So why do it for the clients? Chartered accountants can also have their own startup. See, our IQ is not lower than any other professional. It's certainly much higher than anybody else. Once you have become a chartered accountant, that itself is a proof that you have an IQ above average. And that is what required to have something, start something. Only thing is we need to get out of the mindset of negativity. Only questioning, only questioning, only questioning. Need to refocus our energy towards the solution. Just reshift, just shifting it from question to solution. Identify the problem, but focus on the solution. Don't find the problems from the solutions. A problem has come to you. What is the solution? Now, I'm not aware of, not certain about this. Clear text is used now very successful. What they did, GST was introduced, and they were the first of the block to provide a solution, provide a platform, to provide a platform. Now, we chartered accountants know the entire flow of the events. What are the requirements right from the initial registration until how it happens? We all know, but very few of us ever ventured into that direction. Why the software required or solutions required for tax filing or TDS filing is not even thought of by the chartered accountants. Now, see the fun or rather tragic part. When your team is filing a tax return or tax audit report, they are given a very limited option drop-down list. Preconceived, anticipated by some software guy who may not be even aware of the income tax requirement. Now, if a chartered accountant designs the software or a solution, it will be more realistic, it will be more compliant with the tax laws or any law. So this is an area where chartered accountants should seriously think about why not become a startup entrepreneur instead of looking for startup clients. Thank you. I have given my email ID in case you have any query, but please no legal queries because I may not be the right person to answer the legal queries. Yes, sir. We have about 10-15 minutes. How much time? No, how much time we have for question?
Then our friends in
Before, sorry, please. Not very clear.
if you want your can be added. No. Yeah.
I could not. See, that all depends, the all tailor-made, purely tailor-made, depending on the situation of the case. See, whether it should be equity, whether it should be debt, it should be convertible. So all absolutely structured solution, absolutely depending on the situation. Now, see what happened. In case of vanilla equity, the dilution happens immediately at that very moment only. Now, as I mentioned, too soon, too low. So that should not happen. In case of immediate dilution, you are diluting at lower valuation. In case of convertible instrument, you get to know how the things will happen.
Actually telling about the कि startup में ड्राइवर को पार नहीं करने का बराबर है पहले वो कन्वर्टेबल मोड में कर देते हैं लेकिन after the 2-3 years business prosper it only matter of relation of that time but suppose they very big so it is not and the investor don't like they want startup don't promote don't like how to
So that is where our expertise should come handy. For one simple one reason. The promoter or the founder will be more comfortable with your inputs because you are supposed to be not interested party. You are not representing the investor,
Correct.
assuming that,
Yeah,
and you are with the promoter founder for quite some time.
yeah.
So they will be more comfortable with your input. Now, how do you convince the investors? Investor is there to make money.
Yeah,
Now, buying cheap is their objective and their target.
yeah,
As a representative of the founder or the promoter, you want more money.
yeah.
Now, that is somewhere that the negotiation skills come in. Negotiation skills comes. It's like buying something. A very basic example is buying something from the market, negotiating with a jeweler or with a shopkeeper. It's like that at different scale, at different level.
Only one of the things that is there is no. In the industry, that I don't know, instead of 10%, 5%, that is pretty actually it's pretty valuable. Or after 3 years, they taken initiative and more, and after 3 years, more has to be converted into equity. That time the conflict will not come between two of them.
At that time, the valuation will be decided. Now, see, that is the reason why I say notes are more popular now, becoming more popular.
Yeah.
Because the valuation is open-ended. Investors feels more comfortable if things go up, they get in any case good value. If it doesn't go up that way, so they don't have to pay more in future. They get more equity at that time. Because of that reason, vanilla equity is not very popular in the startup funding system.
That time after 3 years, valuation is decided by being for a report of 10 lakh stamp value. That was.
नहीं ऐसा वो स्टाम्पिंग का नहीं होता वो
That only.
Yes, we are talking about the real money, friend. We are talking about the real money, not paper money. So if somebody putting in 10 crore, 100 crore rupees or 1,000 crore rupees will not simply do it on the basis of stamp of anybody. Anybody, forget Big Four.
Yeah.
Forget Big Four. It's a pure hardcore business decision for the investor as well. They will look at it this way. Today they are putting in 10 crore rupees. After 1 year, they are putting 100 crore rupees. The total investment is 110. They anticipate or rather they expect that after 5 years, this 110 will become 1,000. That is their expectation.
Yeah.
Now, the expectation is realistic or not realistic is their business risk. So that is the reason they say that hit rate is hardly 10%. In startup funding sphere, not even 10%. Out of 100, only one may be success.
Yeah.
Out of that, yes, and one success will take care of all the failures. So that is the risk they are taking. So otherwise, in 2 years, 1,000, so $1 billion valuation, and that too immediately after COVID happened. When somebody was ready to put in that kind of money. And they did it. It's a perception, one perception.
Yeah, yeah, I agree. Thank you.
This issue of the startup, how many of them turn out of 100?
Sorry?
What is the success issue of the startups? How much is the success ratio that we have seen with the startup?
I said 1 out of 100, 10 out of 100 max.
People do.
See, I'll tell you what are the major reasons. It's a good question. What are the major reasons of failure? I'll not go into the success reasons. What are the major reasons of success? First and the foremost reason is the misfocus. They are dreamers, remember. The founders are dreamers. अब वो शेख चिल्ली के या मेरे डाल के हसीन सपने हैं कि रियलिस्टिक है. So they misfocused and not realistic. Number one. Number two, as they move along, they are not open to changes or open to corrections. That is another reason of failure. And third one is, see, it's a continuous and very high speed exercise. It's not something like a normal conventional business. You set up a plant of a fixed capacity. Plant is set up, production starts, and product is you start selling. So you have raw material cost, manpower cost, and you are selling price and your fixed profit. So it's stable and static. But in case of startup, when you have concept business, that doesn't happen. First 2 to 3 years is minimum negative cash flow situation. So they have to keep on managing the cash flow. So that is another area where they fail. If they can't manage the cash flow to retain the team, to retain even the chartered accountants, I mean, you cannot work for free for 2 years, 3 years, 4 years. You also have expenses to take care of. So that is another area because they cannot do the financial planning properly. But of course, that is an opportunity for chartered accountant also to do the proper financial planning. So first is misfocus. Second is that they are not flexible or open to correction. And third is financial misplanning. I would say that because they don't have financial discipline. Many times they don't have because a lot of money has come to them suddenly, which they might not have seen in their earlier life or earlier experience. So they become indisciplined. Because of that, that is another reason of failure. So these are that is the reason the success rate is very, very low. 10 is nowadays, 10 is not achievable. Out of 100, even 10 is not achievable. Another reason is that, see, nowadays what we are start mentoring is my passion. I do it out of love. They come to us with good ideas, no problem, nothing wrong with that. But they come not with innovative ideas. The same story, same idea, some success story is already there. So they come with that only. When I ask them that it's already there, what difference you are going to make? In what different way? How different you are from that? Now somebody came to me with Oyo kind of business model. I said, how different your business will be to Oyo? Then this Hela Inframart, another startup from Ahmedabad came to me for funding his same resourcing infrastructure products. I said that I have my own family construction business. I have partners who are into infrastructure activities. I have seen those. Then I know the cornerstone from that also. How different you are from them? What is the differentiator? Market is huge, no doubt in that. There can be 1 player, there can be 2 players, there can be 10 players, there can be 100 players also. But how different you are from infra? And they are not good ones. So they start with an idea based on some existing success story without knowing how different they will be. What will be the additional point which they will be able to deliver to the customers? Then value ultimately will come from customers. And value will also come from the customers only. Eventually, we have to keep one thing very, very clear in our mind. Valuation comes from the profitability. The only difference in startup funding and valuation and normal funding is that in case of the normal funding, it is historical data, static and continuous business profit loan, which is visible. You have an X capacity, you know the percentage profit, NPA, PAT, PBT, blah, 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 you know everything. So you can calculate it. In case of startup, it is all perception value. So initially you will not know, but eventually, I'm telling eventually, it has to come to the profit. It cannot continue bleeding forever. Zerodha also got money. Now it is super profitable. It is making super profit. Every venture has to be profitable in ultimate analysis. It cannot remain in loss forever. And one of the biggest reasons for the failure of startup is that they are too much focused on the unicorn, not top line. यूनिकॉर्न मैं यूनिकॉर्न बन जाऊंगा अरे यूनिकॉर्न बनने के लिए जो डिफिकल्टीज है वो आप फेस करो तैयार हो गया उसके लिए पैसा आज दे दो बट दे आर नॉट रेडी टू वॉक दैट डिफिकल्ट पाथ दैट इज अनरियल
How many startups are there?
they go I mean perspective in Mumbai ICI startups fair 23 at Geo Center. I was part of the court. We had invited pitching from the startups. 2018 was the first event in Grand Lab. At that time, we received about 70, 80 pitch ideas. At Geo Center, we got 300 plus. 5 years, understandable. Now, after that, during the event, a group of investors from Gujarat approached me, sir, we want to hold a separate session for few startups. They want to pitch their idea to investors from Gujarat only. So can you make the arrangements? So there were about 70 startups. Over and above those 300. So now to put any number, specific number of how many startups is very, very difficult because no official or authentic database is available. Now, one may try and get the statistics from the number of registered startups. So that will be misleading. That will be misleading. Some no, what happens? I'll tell you why. उसका भी reason, which other companies know it well. कई बार क्या होता है, आपके पास क्लाइंट आता है, बच्चा तैयार हो उसका, ऐसा अगर आप स्टार्टिंग का रजिस्ट्रेशन करवा के छोड़ दो, तो उसमें क्या है, काम ही आएगा। तो नॉन ऑपरेटिव कंपनीज कितनी आप लोगों के पास में, बना के छोड़ दो, क्या खर्चा आएगा? कंपनी का तो फिर भी आपका कंप्लायंस का पोस्ट आता है, इसका तो वो भी पोस्ट आता है, तो समथिंग फ्री, चलो कर दो। Now, how many of that kind of startups are there? Now, one startup founder came to me. He wanted to do something on similar line, like clear text, and then that one MCA filing solution companies, they are missing the name. So he came with the statistics and profitability data of those 3-4 companies. They have made losses in last 3 years, they have made losses in 5 years, they are continuously losing the money. So we gave him half an hour time for presentation. Normally we don't do that, but we gave him because he was a chartered accountant and wanted to encourage. Out of half an hour, he devoted 20 minutes just to look at the negatives of existing players. They started on the year this. This is the top line in year 1. This is top line in year 2. This is the bottom line in year 3. This was losses they have made. Competitor 1, competitor 2, competitor 3, competitor 4. After he was finished, I asked him simple thing. Now you tell me what is the differentiator? You are chartered accountant. You know their pitfalls. How do you propose to be better than them? You tell me they lost the money in first 5 years. What is your projection? Will you make money in first 5 years? If yes, how much? If yes, how and how much? There was no answer. So this is another vision. They start with the notion only of valuation. The idea is nothing novel.
I think the startups probably look at the valuation of the company. They are not interested in doing a business for long. They just wanted to, we want to.
Ultimately, sir, ultimately, you talk of any business. You talk of any business, you know of valuation. Everything boils down to market, consumer, and profit. Everywhere, every type of business, every activity. Now the time frame may change. The time span may be 5 years, maybe 1 year, maybe 2 years, maybe 3 years. That's it. So as a chartered accountant, a practicing chartered accountant, I can only suggest one thing. We also should look at seriously whether we can use our expertise for providing innovative solutions and use the technology. Use the technology and get out of this mindset of only finding the problems. Reshift, refocus your energy on finding solutions.
See, finding the problem itself is the first step to find the solution.
Agreed, but we are almost fixated on the problems only.
You don't get fixed to that.
We are fixated only on problems. I tell you at Bangalore startups where, how much time do we have? 5 minutes now?
I think,
Okay. Just 1 minute.
Yeah.
At Bangalore, because a lot of chartered accountants there were, but there were 1,200 participants and few of us were sitting together for informal discussion. So somebody suggested that we should have an AI of chartered accountants only, alternative investment fund of chartered accountants. A good idea. Fine. So we need to identify immediately 20-25 names and 5-10 names who can be part of the core team. You know, this kind of discussion, everyone is ready for everything. No problem. Then what next? How do we do it? Then out of 25, almost 20. This is the problem. 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 I said, where is the solution? Why we are discussing it? The objective is to find the solution. This is the problem. This is the problem. Yes, problem is there. Then how do you make the money? Keep continuing filing GST returns. Keep fighting with the government of India, Finance Ministry for extension of the date. Thank you.
Thanks. Before we move on, I request Secretary Committee, CA Energy.
Good afternoon, friends. I feel honored and privileged to get the opportunity to propose a vote of thanks to our eminent speaker, CA Alok ji Pansari. Thank you, Convener Madam, for giving opportunity to me. Friends, CA Alok Pansari enlightened every aspect for opportunity for CA in startups ecosystem. How to develop our practice in startups by giving idea, new development to startups. How the conventional practice used in startups. How to tackle with investor, pre-funding, due diligence, post-funding, disbursement, etc. Everything here enlightened in very smooth manner. On behalf of JB Nagar CPA Study Circle, I immensely thankful to CA Alok Pansari for his efforts towards sharing his knowledge and elegance of explanation of everything on the above subject. I need to mention my deepest sense of appreciation on behalf of the Study Circle. I request all of you to give a lot of applause. Thank you.